Hi, welcome to the Market Alert for Wednesday, the 3rd of February 2016. And in today's Market Alert, we'll have a look back at yesterday's activity, and we can see from the start of the session the market putting in a sell signal with a potential risk of 50 points there. The market obviously waiting for Fisher to speak at 6 p.m. The market very quiet, as can be seen by the sideways action. And what the market is telling us here is that even though the market filled this order, the market doesn't want to trade below the 16,200 level. You can see the market bouncing above and below this line. So let's just speed things up a bit. And what I want to show you is how you can actually reduce the loss from 50 points to at least half of this amount without using any emotion, but looking at the price action on the price chart. So the market comes back through again. Now you can see 2.5 points down at this point. Of course, you've got to add in the spread and also the slippage in the fill as well. So you can see the market there sideways, and it doesn't want to go down. I mean, that's what it's showing us here. It's just simply doesn't want to go down. Again, it comes down, has another look at the entry price, and you can see this is becoming a support area for the market. When you see this type of activity, it's likely the market's going to actually bounce in the opposite direction, and in particular when the market's been marked down by the major players in the first part of the session, and then it's finding this support. If it won't break it, then it's got to go sideways to higher. So you see the market coming down, and what I've done here, if I can just wind this back a bit, troubles with recording a lot of video, it's very difficult just to wind back small increments. So what I'm doing here, I can see the market's making these lower highs, and what I've done, if I just pause the video there, you can see it's each high, consecutive high, is lower than the previous one, and the market's failing to break here. So it's creating some sort of like compression ready to move higher as well. So what I've done is to actually reduce the risk. Even if it's 1% risk to start with, then we can actually reduce this down to a half and preserve the capital, because the market doesn't want to move lower. So what I've done here is move the stop down to 50% above this bar, which gives the market a chance then to see if it bangs its head against the 16,200 first, and if not, it will come through. And that, of course, is precisely what the market did. So you'll see here market coming back up to the 16,200, and on this occasion it drives higher. So let me just speed things up a bit more, and if I just come back and then just play this, you'll see the market coming through and actually hitting the 16,208, and first time in 5 or 6 bars the market's actually broken these lower highs. Somebody is actually bidding on this. So it's a matter of just cleaning the chart up and waiting to see what happens next. So let's fast forward through all of this. We've got the quiet part of the session, and at this point I've actually turned on signals during the quiet part of the session as the market shot up, went up 50 points, came back down, then found support, and then starts sitting sideways. And of course Fisher's going to speak at 6 p.m. from the Federal Reserve. You'll see a sell signal there that is actually filled and actually goes down to the target and down to the 16,150 level as well. But that trade is not valid for me. I didn't do that trade because the market was waiting for Fisher to speak. So at the moment sitting on a 26 point loss. And at this point also, for those of you not aware, Tuesday evenings I'm never at my desk. I have an evening out with my wife. We do ballroom dancing, so by this point I'm missing in action, as it were, anyway. But again, just to come back to those of you sitting and watching this, as I warned yesterday, the Fed chairman would be speaking, and to avoid short trades, even though this one went on to make a profit, you will know from Monday, that the market doesn't stay down for long, and then we'll move back to the upside because of keeping the Ponzi scheme alive. So we've got some more sell signals there that are not filled. We then get a buy. the market's trying to digest what Fisher has said. We see this one being filled, and then the market comes back and gives a sell signal, and that one is filled. So then we have to take another 29 points hit on that. And as the market reverses again, you'll see in just a moment, this doesn't go down to the scalp. It sits and flirts with the entry price there on the sell side, and then we get a buy. Again, this is going to reduce the losses, and we see the market moving back up and then hitting the scalp to actually pull back some of the profits. The market's got into a very quiet range here, which is really strange, as you'll see why when we look at the charts, the full picture in just a moment. So then we get another sell signal. There is weakness in the background now for the sell side. Even when Fisher spoke, you can see the market showed some weakness. This market has now turned from the dead cat bounce that we've seen during the last few weeks into the short side once again. So you'll see probably see the buy side failing now that the central bankers have cleared off and gone back to their caves. And this will leave it free for the market to decide instead of being moved around on the central bankers' rhetoric. So you see the market coming down there for the last trade of the evening. So pulling back 40 points in the latter part of the session there. So on the overnight, the market has moved sharply. You can see there dropping down over 100 points at one point, and coming back again. In the moment, the market is currently sideways. We've had a couple of decent trades during the overnight session. Why we couldn't have had those yesterday afternoon on the first signal, who knows, but the market obviously waiting for one of the Fed members to speak there. In the daily chart, as we mentioned yesterday, we had this resistance at 16,418 in the bigger picture. The market trading back through all of these areas of resistance that were before, which would normally become support, are not acting as support. So now let's have a look at the downside and see where the market is likely to find support. Well, the first areas are going to be all of these that immediately just jump out there, and again we'll just leave those on the charts. I don't need to read each one out for you because you can actually see those. Make a note of them, and that's where the market's likely to find support should the market move lower. On the news front today, what have we got? A huge amount of high impact news here. 9:30, then we've got the weekly non-farm employment change, ISM manufacturing at 3 p.m. 3:30. Crude oil inventories. Crude oil lost 5% yesterday, 5% on Monday, down 10% so far this week. Crude oil has an impact on the stock market. The more negative that is, the more weakness, then the stock market is likely to follow as well, because we've had a bounce of around $6 to $7 in crude oil over the last week as well. So you don't want to be in at 3 p.m. or 3:30, more so 3:30 at the moment. I never thought I'd hear myself say that you should be out of the market for the crude oil figures, because up until the last couple of months, the crude oil figures never really factored in or was an issue when you were actually trading in the afternoon session. But now it's become that way because crude oil prices have lost over 70% of the value, and it is now what seems to be driving stock prices, because obviously the correlation between a low price, or the perception of a low price in crude oil, means that there's a lack of growth globally, because nobody's using crude oil at the rate that they were before, hence the higher price. So again, keep an eye on those at that time. And then finally, in the implied volatility, 1943 up slightly yesterday, of course, because the market was down by the end of the session there. So that's it really. The Shanghai market's down just a bit, nothing to write home about, and as we've seen, the Dow is currently sideways. So hopefully today we'll have a bit more volatility, just to make up a few more of the losses from yesterday. As I've said before, 99% of the time we'll always end up with a profit, but there's one day in the month that comes along and just makes life a little bit more difficult, and yesterday was that day. So with a bit of luck and without preempting any more bad days, hopefully that one's out of the way now, and we can look forward to a bit more volatility, particularly to the downside as well. Right, that's it. I will see you in tomorrow's alert. As ever, thank you for your support, also for watching. I shall see you in the next one. Thanks for watching.